Hello, hello, and welcome everybody to a new episode of the VS1 podcast. Today, I'm super excited to have one of the prominent figures of the RWA industry with me. With no further ado, let me introduce Ziv to you guys. Ziv, it's your turn.
Hey, Fehmi, thanks for the introduction. It's a pleasure to be here. Um, really exciting to be on your podcast and great initiative. Great initiative.
All
So
right.
maybe I'll start with a little bit background about myself. What do you say?
Sure. Yeah, go ahead, please. Introduce yourself to our audience.
Okay, cool. So I've been in the tokenization RWA space since 2018. Um, I started my career as a lawyer. I was a lawyer for about 15 years because before I moved into the blockchain space. And as a lawyer, I was doing corporate and securities work. What I understood in 2018 was that the technology of blockchain is probably going to be the future railways of the entire financial system. Um, we saw the way that ICO worked at the time. It wasn't the most compliant way to work, especially in terms of AML and KYC and all of those procedures. Also, not in terms of securities law, but it worked. You could raise money from the entire world at the same time, without boundaries. Very efficient. Settlement work, amazing. You would send your token, you get the token back. So everything was very efficient, and it was very clear that this is going to be the future railways of the financial system. Then I developed a career in this space. I did a few executive roles. One as a legal lead at Ito, the large trading platform, which is now traded on the Nasdaq. We launched a very interesting token project named the Good Dollar together. Then moved to a company named Onera, located in the UK. Onera is doing interoperability between financial institutions. It solved the problem of each financial institution having its own blockchain and the way that those financial institutions communicate between one another. It's like a bridge between financial institutions to trade tokenized product, mostly tokenized shares and bonds, and conduct settlement between them. And I had a startup which I ran for 3 years named Symmetria, which was tokenizing the market for pre-IPO. So trading of companies before they become public. Right now, it's very. It became very popular with the SpaceX and and Anthropic IPOs and everything going on. Actually, this is a very interesting market. It's very broken. If anybody listening to this podcast thinking about maybe trying to fix it, they can speak to me. I'll be happy to assist and contribute from my knowledge. But it's a very difficult and broken market. It's controlled by brokers. Everything is conducted through Telegram chats, and nothing is really automated and settled properly. And there's different reasons for that. So I was doing in Symmetry. I was a private market trend for about 3 years. And today I'm head of markets and partnership for XDC Network, and I'm leading the STG3 community, which I started in 2018. I'll touch on each one of those roles. I'll start with the STG community. STG community is community about 700 executives from around the world. We are the CEOs and the C-level executive of most of the financial institutions and vendors that exist in this space. CEO of most of the company that does tokenization in the recent years, and discussions are mostly around innovation in the space, competitors, regulation, what regulation enables, what it doesn't, how settlement work, how does settlement work with the current regulation, CSDR, and so on. there's a lot of internal discussions within the group. We're having an event in London once a year. Recent event was very successful with participation of, I think, most of the financial institutions, the big financial institutions, having BlackRock and the other asset managers, State Street, Franklin Templeton, Fidelity, and from the banks, JP Morgan, Citibank, and Barclays, NatWest, and many other asset managers and banks took part of this event, which was situated in London. It was regarded as a very high quality event. Not very big, by the way. We're about 300 people in the event, 300, maybe 350. So it's not a huge event. It's more like a gathering of the tokenization industry. With respect to my work at XDC, what I do is I'm heading markets and partnership for XDC, which means that I'm in charge of the way of listing of financial products that are backed by the token. We listed two ETPs in the European market and the Swiss market, and now we've basically received the SEC statement approval for a prospectus to be launched in the US market on an ETF, and that's going to launch very soon, hopefully by the end of next month. And the way that the relationship with the different market makers, and also general business development for the XDC network. XDC network is been existing since 2018. It's one of the OG network. It's kind of similar to XRP. There's a lot of similarities. Also focused on real world asset, strong narrative around trade finance. It ties to a lot of trade finance organization and trade finance technology that has a strong partnership with SBI Group in Japan around trade finance. And trade finance, for those who doesn't know, who listen to this podcast, is the way that you move commodities from one place to another. So you need to ship the commodity while it's in transit, and then someone on the other side need to receive the commodity and pay for it. So there's a lot of legal documents. There's a lot of procedure to conduct a trade finance transaction, and because it involves different banks, different from different jurisdictions, it's a very complicated transaction. Imagine a transaction between a Chinese manufacturer to someone in the Middle East. There's two banks that usually does not communicate with another. They need to provide guarantees to one another. Someone is sending commodity without getting paid, and you need to count on the other side to make those payment. There's a lot of legal documents that control this. It's called a bill of lading, a bill of exchange, a letter of credits, and some of them some of them you're not. And blockchain can expedite those transactions. And XTC has made the acquisition of a company named Contour. It invested in another company named Olea. It's invested heavily in the trade finance space. And about 2 weeks ago, I was in Zurich speaking about it in a forum by the Trade Association. Next week, I'm going to be in London, and I'm going to speak about regulation by another trade finance organization. So that's basically what XTC is about. It's about I think about $500 million, a little bit more in RWAs listed on XDC, including money market fund by BlackRock, Fidelity, State Street, and so on, and many product out of Brazil that been listed on XDC by companies that provide private credit mostly.
Okay. There's a lot to unpack here. Thank you for opening all these doors. I don't think we're going to have time to go one by one, but I've taken a few notes here. You mentioned a few things, obviously, and one of them is kind of anecdotal, but a lot of people, for example, were really eager to get a share of the SpaceX IPO a few days back. A lot of them were waiting on Binance and other major exchanges where it was announced that they will get a share. People even fronted the money, but nothing happened. The fact that it was oversubscribed made the broker that is actually the supplier for those exchanges not have any shares, and then there was nothing to split, nothing to tokenize, nothing to fragment, nothing to do in the end because the initial supply was not there. So I think the industry was thinking a lot about all the subsequent steps of like, okay, what happens? How do we tokenize it? How we distribute it? How do we like split it into small shares? How we track? How we manage governance? How we manage everything? But step number one was almost the most important, and that's where it failed in this case, obviously, because it was oversubscribed. Um, how would you have done it differently, or is that the only way it could be done, for example?
I'm not familiar specifically with the SpaceX IPO. What happened there? It was oversubscribed, and why didn't the underwriter allow for additional subscriptions? But I can tell in general that the way that regulation is built in the financial market is very distorted. So the regulators, they are dividing roughly between two type of companies: public companies and private companies, without distinction. So your company, VS1, and they are relatively early startup. They are in the same category together with SpaceX. Although SpaceX is $1 trillion company, you together sitting in the same category of private companies without any distinctions. And 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 the other side is public companies. And public companies, there's a few full disclosure that is required, and there's a lot of regulation about how the shares are traded, and there's a lot of consumer protection that's going into public companies. But with private companies, there's basically nothing. The regulator count on the investors to make educated investing, and the level of consumer protection on investor protection with those companies is very low. So that's why you find a lot of mistakes in this market. Um, the way that private companies have been developing over the years is very interesting. It used to be, who holds the company shares is usually the person who founded the company or invested in the company. But today it's not working like that. First, you have employees, right? You have a lot of people that own shares by virtue of being employee of the company. And those employees, they want to sell. Sometimes they leave the company and they only have like 60 days where they can sell those shares, or they can exercise those vesting options into shares by paying a lot of money. So there's a lot of pressure when they leave the company about exercising the option into shares. So they're looking to sell, or they're looking to sell some of their value in the company. And there's people that have bought in a secondary acquisition, like in SpaceX, from someone who was an investor in the company. And where company becomes very large, like SpaceX, there's also different levels of investors. So you have investor investing in SpaceX through an SPV, and there's other investor investing in this SPV through another SPV. So there's like multiple layers of investors and SPVs. So that's created a lot of complexity. Right now, regulation does not address that and does not solve this and does not provide for an efficient way to invest in those companies, to get information about those companies, and to have a secondary market like you have in every other public company, where you can buy and sell those shares on the secondary market. the secondary market for those companies is also not very efficient. And I think this is the biggest hurdle. And until that is solved, we'll see more of the companies like or situation like SpaceX where investors were not allocated in the shares in the public offering.
All right. So let's dive into the specifics of the community that you created, right? You're managing STG3. So you mentioned that you guys are hosting events, multiple events, one of them coming soon. And the London event was pretty popular. So how does that work? Is it like a closed community? Is it like a community that is active, or are most people kind of passive? What's your journey there? How did you build that community? How do you grow it? And how do you manage to make sure that people are actually active on the community?
Yeah, so I started the community in 2018. The idea is that I met some interesting people, just wanted to make sure we're in touch. And I also saw some value in sharing my network, my personal network, with others. And over the years, I started adding people, meeting and adding executives to this network, and I was picking them. So the CEO of Vitor, the CEO of Firebox, the CEO of Archex, the CEO of Tokeny, head of legal for Centrifuge, people from Ondo, from exchanges in digital securities exchanges, meaning like digital securities tokenization exchanges from Canada, Seychelles, US, different US platform, um, even South America, Switzerland, Germany, Netherlands. Everybody was building solution around tokenization. Spain, we have a platform from Spain. Everybody was building solution around tokenization and secondary trading of tokenized shares. And I just brought all those people together, and later additional financial institutions joined, members um, of large financial institutions from all around the world have joined, and it created a very powerful executive community. So usually the screening process is that it's like one member brings another member, but lately I started expanding this community. This is why it's still relatively small. We have around 250 executives that are on the WhatsApp group, and the rest is like members of the community which join through the events. And and recently I started introducing some AI components. We're having like an AI which is the community brain. It has all the conversation from the 7 years of operations of the community. It has a list of all the members, and the AI knows what those members are doing. It has the conversation from all our events where the financial institutions have been presenting what they are doing in the space. And today you can go to the AI, which is called Thumper, like the bunny, and you can ask the AI, okay, I'm looking for clients. I'm looking for a deal. I want to sell shares. I want to buy. I want to. Who should I speak with? And the AI, which has the community brain, basically can direct you and can help you in the matchmaking process. I'm looking for investment. I'm looking to invest. I was just today. I was in a VC. They invited me to consult me about something, and I gave them the AI to play with, and immediately it gave them some leads on potential prospects. It explained to them what's going on in the space, what's the thing that are trending, what they should look for when they invest. So I think we're also like moving, doing this transformation from like a little bit of a closed community of executive, and bringing more people on board.
Very cool. I really like the evolution of this, and obviously the fact that you're introducing an AI companion that um, liberates you from answering all those questions, right? Like because you were kind of always, I guess,
Exactly.
bombarded with requests.
Yeah, because it's WhatsApp, then like people are reaching out to me like, can you connect me to City? Can you,
Correct. Yeah.
can you help me, find someone to buy, to sell, or I'm looking for a design partner. I'm looking to invest. So the AI is basically designed to replace me in the process.
Yeah, yeah. I think you can take it to the next level afterwards, and we can talk about it after the podcast, where you can say the AI can also negotiate success fees. If someone works with someone, then they owe you something, but that's a completely different discussion.
Yeah, right now we're not in the monetization phase
Yeah.
yet, but we'll get there. We'll get there. I
All right.
believe.
What I also like about the community is that you focus on quality over quantity. One of the biggest mistakes people do is like, I want the biggest community, and they start onboarding everybody into a community, and then the quality drops, and nobody's interested, and everybody leaves. So if you focus on quality, it means that people understand that it's kind of an exclusive community, not open to anyone, and they appreciate that. The other thing that you
I don't
also
know
do
if I
very
should
well.
share that,
Hmm?
but well, the AI also knows. The AI also screens people. Yeah, that's the again, like the WhatsApp community today is a very close, is still a very close community,
Hmm.
and you need to be C-level executive in a relevant organization to get into the WhatsApp community. That's the reality of it. And the onboarding link basically allows the AI to screen you based on your parameter and see if you're suitable to the AI community. Because yeah, it's important to keep uh, the level
That's
high.
very cool. That's very
There's
cool.
also no promotion of tokens. There's very
Yeah,
strict rules about what you can speak the community or not. Yeah.
yeah, that's it. But these are business professionals. The other aspect that I think is very powerful is this industry is heavily regulated, obviously, and compliance is key in everything that kind of bridges the gap between blockchain and real world in the end. And this is really the cornerstone of like, okay, here's where we actually apply blockchain technologies instead of just launching NFTs and meme coins that are worth nothing. We are actually bringing real TradFi components to blockchain because obviously of the fact that you can settle instantly, cheap, it's immutable, it's automated. That everything is like really in the favor of using the technology, and the fact that it's super regulated and you need to be super compliant means that people in the same role in different countries should be talking to each other because crypto is international, right? The
Yeah.
regulators are local, but once things are tokenized and are on chain, you need to keep in mind that like this is international, so you also need to add that additional layer of compliance of saying, okay, I am international, but am I allowed to work with Americans, for example, because I'm not already talking to the SEC? Should I exclude them or not? Should I what should I do? So I think having those like decision makers talk to each other from different jurisdictions also accelerates the progress of the whole industry because they know what's going on in Spain versus Dubai versus US versus China versus whatever.
I I personally really believe in the connection between technology companies, vendors, and the big financial institutions. From my understanding and knowledge, I think that the big financial institutions they're kind of behind. They need to be. They need a lot of support, and they need a lot of solutions. So they need to be connected to the best vendors, and everybody's chasing them. Everybody's trying to get because the opportunity is really big. Um, so having an organization that facilitates those communications in a way which is more comfortable, whether it's through events or webinars or community where everybody can speak, is the right way to connect to those financial institutions that are building and they are launching products. They are launching those products into production. From my personal experience, I was with Onera, um, and we were speaking to a very large financial institution, and we thought that it would be an investment. We were indicated as that this large financial institution is going to invest in us. And then COVID struck, and we never heard from them again. Like they kind of disappeared. They just didn't pick up the phone. COVID, everybody was, the banks specifically trying to understand where do they stand. How does it affect the business which they're financing. And they didn't pick up the phone. So we did something else. We created this consortium of financial institutions. We communicated to financial institutions, if you want to deploy capital at scale and efficiency, you need blockchain technology. This will bring you transparency and efficiency. And we kind of leverage that to get in front of financial institutions. We started with a small group of financial institutions, but from one gathering, from one meeting to another meeting, the group grew. I think eventually we got from more than 100 financial institutions that we got together under GDF in the UK, Lawrence Wedemeyer, and eventually JP Morgan joined Onera Investment I think at a stage which was quite early for a startup to get JP Morgan on board. And it was huge success. Then US Bank Corp followed, and some real estate companies, and Onera is a successful company until today. So when I'm thinking about this experience, brought me to the realization that there's a lot of value that is waiting for startups in connecting to those financial institutions and other that build in the space. And there's huge potential there. And this is what I'm trying to do with my communities and my event. If you go to my event, which is, by the way, ticket price is probably half or more than every other ticket price to this scale of an event. You get, one-on-one time with some of the largest financial institutions in the world. And we had startups that were leveraging that. We had the panels that we incorporated startups together with financial institutions on the same stage, sometimes to challenge those financial institutions, sometimes to educate them. Specifically DeFi, for example, where you can have the same, both the financial institution and the DeFi startup together sitting on the same stage and discussing like the opportunities, how to bring this technology to the financial markets.
Very interesting. Very cool. So for now, the community is there to support the whole industry. You mentioned that you're not at the stage of fully monetizing this, so you're mainly just running the events. You don't have any service of hand holding or kind of supporting startups who would like to tap into the network yet, right?
There's no service. Again, we have the AI that is supporting that. There's me, where I'm kind of free and available to people who reach out, and I'm developing additional tools. So my plan is to grow this community, this operation, and to and right now I'm also working on this members index, where you can go online and then see who's the member of the community, and that would assist you more in finding your go-to market. So this it's a process. It's in development. Yeah.
All right. Very cool. I want to go back to maybe for people who are not as familiar with RWAs, maybe kind of not enumerate or list, but tackling all the different aspects of RWA. I'm thinking RWAs could be anything. It could be real estate, it could be trade finance, it could be bonds, it could be, I don't know, stocks, it could be even like, I don't know, art, it could be yachts. So you can tokenize anything, but obviously not everything is going to be in demand or successful. So according to you, what are the what are the most successful, or at least most in demand segments of RWA? If we had to kind of oversimplify things and think about it, I would exclude stablecoins because stablecoins are also RWA, but we all kind of agree that that's kind of the main vehicle that is across the board. But what are the different, I would say, silos or pillars that you see really leading the charge when it comes to RWA adoption in the near future?
So my thing is yield-bearing products. There are there's a lot of demand for yield-bearing products. I hear it all over. Also from foundations that looking to diversify their treasury. Yield-bearing products are always in demand, especially if you can offer a yield that's a little bit higher and a good disclosure about where is this yield coming from. Um, the more liquid the yield-bearing product is, the more it's attractive. So a yield product that provides a decent interest doesn't have to be crazy, like 7-8%, which is a little bit more than what the U.S. Is providing in the moment, like on the Treasury yield, which is liquid as a money market fund, or is a money market fund that has a component of covered call or whatever that provide a little bit more yield. Those products are selling, and because there's a lot of again like there's a lot of people holding stable coins. They're looking to generate additional yield on those stable coins, and there's a lot of money locked into crypto. So money market fund and yield bearing product are definitely the one uh, which must be liquid, must be provided in high liquidity terms. So
Yeah.
that would be the first. Second is everything got to do with foreign exchange. So you said stablecoin, but yeah, stablecoin for the purpose of payment, 100%, but also stablecoin for the purpose of exchanging. So um, what's the name of the currency in Georgia?
Larry.
Lari. So why would you have like a digital Lari? Um, the reason to have a digital Lari would be that people are sending USD and they want to convert into Lari, or they want to convert from Lari back into USD or Euro. And if you do it through the financial system, those conversion cost money. If you do it on chain, it's almost nothing or nothing. So having a digital RA is something that could generate a lot of value. And foreign exchange is definitely a product market fit for the entire industry.
Yeah, and on that specifically, I think the most important point you mentioned here is the fact that the products need to be liquid, because otherwise it's the same problem that we're just moving one step ahead to the
Exactly.
Um, but the problem with, like, I personally, with some of the foreign currencies, most like the top currencies are liquid, which means you can tap into liquidity in multiple locations. The smaller countries who have an illiquid currency has the same problem, because even if you say we're going to tokenize the Lari or whatever other small currency,
Mhm.
if there's not enough liquidity to support that tokenization, then it's stuck there, right? Like it cannot be easily swapped for USDC or Euro C or whatever.
Why do you think there would be a problem with liquidity in the? If we do it for a small currency, let's say the Lari, yeah, how much the Lari is offering right now
I I
in
I
terms of we can ask ChatGPT.
in terms of yield, that nothing much, and I think in terms of access
Mm.
to real yield, nothing much. So there's demand for people to move on from the Larry to something like USDC, for example, and the fact that
Mm.
there's way more demand in that sense than on the other sense, people trying to go from USDC to Larry, is what I personally think is the problem that applies to multiple countries. Because if you open that door, it's going to be like a liquidity exit mostly, and it's not a back and forth like equal flow of value.
Mm.
Most people are trying to exit a certain market, and that's why
Mm.
central banks are very hesitant to opening
So you
that door,
think there could be like a negative impact, but the LAR is offering about 8.25%.
which is very high compared to
Because
any.
there's high inflation. Because there's high inflation,
Yeah.
but I think yeah. By the way, it works both ways. So when I'm speaking to the Swiss, for example, they're concerned by everybody buying Swiss franc, and the
Yeah.
Swiss franc going even higher. So
It's the opposite problem. Yeah.
is those exactly it's the opposite problem. Yeah, the I think my thinking is that it's like water. It would happen anyhow. Again,
Mhm.
like water, you cannot stop. If you have a drip in your house, you see like the water, they kind of find a way to drip out. So there's no really way to stop that. If there's a demand, then someone would create it. Maybe they won't do it out of Georgia. Maybe do it out of the U.S. where you are,
Mhm.
or they do it out of the Bermuda or somewhere else. But there's nothing stopping anyone from buying, currency, and then providing a digital version of that currency, because the procedure itself is very simple. You put it in some custody account, you get a receipt for the fact that you put that amount in a custody account, and that receipt you exchange for whatever other currency. Um, so that's that's my thinking about it. Maybe I'm wrong, but I think there's eventually
I think it makes sense.
everything would become digital. Everything would become digital currency. Every currency would become digital.
Yeah, yeah, I tend to agree with that, but like more on a, I would say, mid to long term horizon. Like short term, the regulators still have a strong hold on whoever's doing what. Obviously, in those smaller countries, more so. But even in the US, obviously, we've seen a shift since Trump got elected. But like not long ago, the SEC was fighting against everything crypto and blockchain, right? So
So
it,
I want to speak about this narrative. I think it is wrong.
okay.
Like I think yes, the SEC was fighting crypto ICOs and scams, but at the same time, US had very clear policy saying we want to have the US dollar dominant in the crypto space. And they took a company that basically issued, don't quote me, but let's say some kind of a security. Yeah, it's called Circle. They
Mm,
took something like they took money and they like issue a derivative of that money in a digital way, and they provided with full clearance to operate. Why? Because that money went to investing in U.S. Treasury bonds. So I think the U.S. from a very early recognized first we want to have the U.S. dollar dominant within the crypto space. Second, it benefits us because this money basically going to buy treasury bills, and we need somehow to finance our debt. So they will benefit from it. So at the same time that they were fighting ICO, they also had this very straight policy about we want to keep the dollar dominant within the crypto space. At the same time, the European, for example, they said, let's create regulation. Let's build a regulation, a MiCA regulation around it, which didn't turn out that well because it blocked a lot of innovation in the space. Many startups find it hard to be compliant with the regulation. The idea that Europe had was, we'll create this regulation while the US doesn't have a regulation, and then everybody would come to us. But it didn't work that way. Eventually, the regulation kind of hindered innovation in the digital asset space in Europe, I think relatively. And many startup eventually went up to the US market. And other places in the world like Dubai, Singapore, and so on.
yeah, I think like a Clarity Act is kind of almost like I would say I'm tempted to choose between desperate and genius,
Mhm.
um, because it's kind of the only way they can save the dominance of the US dollar moving forward, knowing that the petrodollar like narrative is kind of not as solid as it was maybe 20 years ago,
Mhm.
mainly because I would say China, right? Like all these proxy wars and whatever, it's the US fighting China in the end. That's how I personally interpret it, through other smaller issues across the world. Like if people think about like the US just captured Maduro because he was a bad guy, no, because he was supplying oil to China for other things than US dollars. So that's the main problem, right? Uh, I don't want to go into those like discussions and conspiracy theories you would say, but in the end, what I'm trying to say is that the Clarity Act, like, just found a new utility to the US dollar, right? You can use the US dollar to back any digital coin you do. And now they're going to authorize every bank, every financial institution, anyone that needs to be compliant to launch their own token. And that is genius movement, because then in the end, everybody's going to be buying and holding US treasuries, and they're not going to be scared of like people following China into selling the treasuries and maybe holding gold, which has been happening for the past few years, for example.
Yeah, again, I'm not trying to come up with any, it's not a conspiracy theory. I'm just trying to look at the reality. The reality is the USDC, USDT is the dominant currency. The US is the USD is the dominant currency within the crypto space. The reality is that there was a policy that supported it much before the Clarity Act and the Genius Act, and now the U.S. is taking a step forward with introducing the Clarity Act and the Genius Act, that is partially also to sustain that lead. So I think there's a lot of benefit. I think that it's good that the U.S. has recognized it before everybody else, and they found a very elegant way to do it. First, without regulation, and then eventually by introducing a regulation. I think the reason for introducing regulation was because they realized that crypto is here to stay. That if they're not introducing regulation, eventually what they'll get is FTX,
Mm.
Celsius, all kind of companies that go on this borderline of being regulated and not regulated, and eventually crashing because it's managed by people that are not experienced enough. And they wanted to push their financial institutions into the space. They rather have, the New York Stock Exchange, for example, or some big financial regulated organization offering crypto trading than FTX, that they need to find out, where after event like what happened with the money. So I think that the policy there is correct, and if other would follow, it would make sense as well. For having like Swiss institution and more clarity, having Swiss institution maybe involved more in the space, big EU institutions, and also APAC. Yeah.
All right. Yeah, I agree. And I also tend to agree with the fact that we need more of these stable currencies, not just pegged to the US dollars. I know that like there's obviously currencies that are pegged to the euro, potentially with the pounds, with I would say the Dubai, what was it like dirham, the Dubai
Yeah,
dirham. I think there's a digital dirham there. So
yeah.
there's like a few initiatives, but like we need way more adoption to also have enough liquidity to kind of do forex type transactions on chain, and that will also be a bigger unlock, because then
All
you'll
the
be able to
currency.
swap from one currency to another instantly with low fees. Like it's completely a game changer as well on that front.
Exactly. When was there's demand, the solution. Someone would come with a solution, right?
Exactly, exactly. Um, we're having a great time, but time is flying fast, very fast, and that means that this has been very interesting. But I'm wary of that time, and I would like to give you a few minutes, maybe, to give us your final thoughts. If there is anything you would like to share with the audience, and like where you see this industry moving forward, like where is the future of this industry?
Yeah. So first, I'm not particularly fond of like future question because I've been asked like every panel that I've been there's a future question. I like the question about like the future, like the price of Bitcoin, because every
Yeah.
panel which I never asked this because I'm on the RWA panel, but then when there's like a Bitcoin panel, they ask like what do you think the price of Bitcoin, and then like someone says like 200K, another one like 500K, another person like a million, and nobody ever says below 100K.
Yeah.
So we don't have that in the RWA panel. We're kind of boring. um, but a good way to answer what's going to be the future of it is like quoting someone else that is more smart and educated and have a better sense of the future than I do, which is the analyst at Citibank. um, um, and Citibank just issued a recent report, I think about 2 weeks ago. They estimate that it is going to be the market for tokenized assets and real world assets is going to be between 5.5 trillion to 8.2 trillion by 2030. So if you believe what they say, then you should bet on that market. By the way, stablecoin and deposit token, they estimate between 100 trillion to 140 trillion. And I
Nice.
can say that relatively to the size of the market, I think the innovation in space is very small. Um,
Yeah, it sounds like big numbers to us, crypto people, but it's still very small numbers when you think about like global finance in general. Um, but it's
the
like
current the
5
current
trillion is
tokenized
way bigger
market,
than the whole crypto industry today,
yeah,
obviously.
the current tokenized, just to understand, like the current tokenized market size is 17 billion. So they're expecting that in the bear case, in the case where nothing succeeds, it's going to be 2.7 trillion. So
It's huge.
158 case. The
Yeah.
base case is 5.5 trillion, which is 323x on today's market cap. And in the bull case, it's going to be 8.2 trillion, which is 482x from the size of the market right now.
Yeah, that's amazing growth. I wouldn't be surprised. I might be biased myself. I'm also in RWA tokenization, but I also believe that the future is there. Because not because like we believe in it, because there are real problems that need to be solved. We've been in this industry for decades and centuries, and it has real issues. It's very slow, it's very clunky, and if we can just make it fast and low fees, why not? Like someone will solve it in multiple jurisdictions and multiple locations, and that the addition of all of those solutions will become our industry in the end. So we're barely starting, scratching the surface. Um, Thank you so much, Ziv, and thank you everybody that was listening to us for this podcast episode. It's been very insightful. I invite everyone that's been listening or watching the video to follow Ziv on X, I guess. We will share these with our publications.
LinkedIn is my platform.
LinkedIn. Okay, so
Ziv
we are
Keinan, Ziv
on here.
Keinan on
Don't waste time
LinkedIn.
on
There's
Twitter.
not there's not many Ziv Keinan, only one more.
Ziv
So
Keinan on LinkedIn. You are
exactly.
lucky to have that exclusive name because a lot of people have very generic ones. So Ziv Keinan on LinkedIn. Otherwise, those who think they are a fit for the community, I think you can Google STG3 and you'll find it. It's pretty
Yeah, yeah,
well
yeah. It's the
done.
website.
And thank you again, Ziv. Everything you shared was really insightful. I really appreciated this episode. And then looking forward to talking to you again, either on another panel or in real life. Nobody knows. Thank you so much.
Sounds good. Thank you.
All
Bye.
right.